before you short the stock market on Monday, because the ceasefire deal or the ceasefire talks fell through. The US is still at war with Iran, and oil prices are going to shoot up and rocket to the moon because the US is blockading the Strait of Hormuz, and therefore the limited supply that does get to market is going to be at $3 million a barrel. Before you short the stock market, please, I want to shift your perspective and see it in a potentially different point of view that might make you second guess or second think, double check your actions. So, first of all, the US oil is separate from the rest of the world, right? So the US, most of their oil actually comes from themselves, right? We're more or less self-sufficient. So we are slightly more isolated to this oil drama than the rest of the world, right? A lot of oil comes from the Strait of Hormuz, but the US doesn't really use most of that. Our oil will still cost more, but not as bad as the rest of the world, right? So in that case then, if we're talking about inflating fiat currency, more people would more likely or would rather hold the US dollar rather than any other currency, right? Because why would you hold? So countries would be, in order to fight the inflating oil prices, countries would have to inflate their own currency. So the US has to inflate their currency less, right? So this US dollar will get stronger compared to the rest of the world. Now, let's talk about inflation. So now that we have record inflation, right, because oil prices are going to be $5 million a barrel, oh shit, hide your kids, hide your wives, right, from the scary oil prices. If we do see record inflation, see, for example, the COVID pandemic, right, record inflation, where did people put their money? Did they continue holding the dollar? Did they put it into treasury bonds? No. Right? Some people did, but your bonds aren't going to outperform inflation. What does outperform inflation? Hard assets, real estate, right? Precious metals, gold, silver, copper even. Cryptocurrency, the stock market, right? So when your money is inflating away, people tend to look for assets so that your assets don't, so that your actual money, your actual net worth doesn't dwindle to nothing because of inflation, right? So even though there is this negative news that might create a lot more black swans, chances are a lot of people are going to look for assets to hold so that their net worth doesn't dwindle away to nothing. Their purchasing power doesn't dwindle away to nothing, right? So that's just, it's not necessarily a warning, but it's like, before you get all bearish, right, there might be another point of view that might point otherwise. And this again goes back to my I guess my new kind of mentality on sentiment, where a lot of times every event has two ways of looking at it, right? You could say, oh, we have record job numbers. Oh, but that means that we're not going to get rate hikes anymore, or that means we're not going to get rate cuts anymore, right? Or you could say, oh, the job numbers are lowering, right? There's more unemployment. Oh, but then if there's more unemployment, that's bad. But then there might be rate cuts, right? Every news has two ways of looking at it, or at least multiple ways to look at it, and it could be both positive and negative, and it really depends on the sentiment, or I guess market sentiment, and how most of the market views that news, that catalyst, that determines how stocks or how assets move in price, right? So just don't always just, I guess, jump the gun and say, bad news, therefore I need to instantly short, right? It really depends on sentiment. And I think that, like, even when it goes back to technical analysis, in my opinion, technical analysis is three things. It is two things, we'll say. It's one, okay, so one is a self-fulfilling prophecy, right? Because when multiple people see like a specific TA, like a cup and handle or whatever, or like a head and shoulders, then people will act a certain way. When enough people act a certain way, then markets move. The other thing is, I think, that it's also kind of, if you think of it in a certain way, Technical analysis is also just a proxy for liquidity, for the number of buyers and sellers, and also for sentiment, right? If you really think about it, if you squint really hard, that's kind of what it is. Sorry, this was supposed to be a quick video, but what I'm just saying is, don't instantly short. Just be careful of instantly shorting bad news or instantly buying good news, because you never know what the market's gonna do, right? Make sure the market confirms whether or not what you're doing is correct or not, and then do it, right? So yeah, supposed to be a quick video. All right, peace, bye.